All right, our first analysis is on EuroCAD. Pull out your charts. We're gonna start on this. Now, I feel like doing the analysis quick today at my speed, okay? So stick with me here. Let's try something different. Every so often, I'm gonna go at my speed, okay? EuroCAD at my speed, starting on the monthly. Okay, we identified our monthly upper, monthly lower zone, sell sensitivity, buy sensitivity. We have our monthly uptrend. Why? Respected higher lows. At every point of contact, we see buy pressure hit the market, so we identified a higher time frame uptrend. Okay, area sensitivity identified. Let's talk flow. We see a higher time frame move to the upside. Took a long time to get to our monthly upper zone. Sell pressure hit the market. Impulse move to the downside. Okay, we see buy pressure coming in after that impulse move, and boom, second wave of sell pressure hit the market. Then we see a break to the downside. So let's take a closer look at this area. All right, again, an impulse move, second wave of sell pressure, break to the downside. This break is a push. Why? It broke an area of strong buy pressure. That's an area of strong sensitivity. What's after a push to the downside? That's right, an exhaustion to the upside. And can we see an exhaustion to the upside from our monthly price action? Yes, we can. Why? Here we have a strong pin bar. So push, buyers came back for exhaustion, and we see a second wave of sell pressure hit the market for a continuational push to the downside, identified by a pin bar, okay? So when we take it down to the weekly time frame, we can see this push and exhaustion cycle. Here's a push, here's that exhaustion, sell pressure into the market for continuational push to the downside, all right? Price is finding buy pressure at its lower weekly zone. Now, we identified our weekly zones. Why? Here we have horizontal, buy, and sell pressure. Former horizontal buy pressure that we're identifying with price action now, okay? So when we look at price action here, at the completion of the continuational push, what do we see? We're seeing a battle between buyers and sellers. When you can't really make sense of price action on a higher time frame, don't make sense of it. Take it down in the time frame, take it down another time frame, and make sense of it on a lower time frame, okay? So that's what we're gonna do. What we're taking from the weekly is what we know from the monthly. Push, exhaustion, continuational push to the downside. So at the moment, sellers have higher time frame control. All right, we've taken it down to the daily time frame. We identified our daily mid-range zone. Again, buy pressure turning into sell pressure. This is an area of strong sensitivity. Okay, so this is where experience comes into play, because what do we see here? For this continuational push to the downside, some of you may notice a double confirmation to the upside. Here's that first touch of our weekly lower zone, impulse move due to take profits, stop losses, buy limit orders, market impulse move, retest, second wave of buy pressure. So technically, this should be a change in direction, right? But what I notice is a potential good short to the downside. Let me explain why. Here we see an impulse move to the upside, okay? Here we see a retest, we see the second wave of buy pressure, but here we have a push to the upside. What's after a push to the upside? That's right, an exhaustion to the downside. We see a lot of sell pressure at our daily mid-range zone. Here we see a strong bearish candle. This is a confirmation that price will come back for exhaustion. Now, if price is going to change direction, this is still a good high probability trade to the downside. Again, after a push, there's an exhaustion. So here's confirmation 1, confirmation 2 with the push. After a push, exhaustion, price may find a second wave of buy pressure at its weekly lower zone again for that move to the upside. But we know that this is a higher time frame seller's market, okay? Which means that even if price is going to change directions due to this double confirmation, there is a high probability short to complete this exhaustion. And we can see sellers entering the market at our daily mid-range zone. All right, so now let's take it down to the 4-hour time frame for potential look at entry. Okay, down to the 4-hour time frame. We identified our 4H mid-range zone. Horizontal buy sensitivity, which will now turn into sell sensitivity. So what do we see here? It's a very simple push and exhaustion cycle. Remember, here's our higher time frame push to the upside, meaning we're looking for a higher time frame exhaustion. All right? But every time frame has its own push and exhaustion cycle. So even though this is a daily push and a daily exhaustion, On the 4-hour time frame, we have our 4H push. Why is this a push? Because price broke an area of buy sensitivity to the downside. So on the 4-hour time frame, we have a push to the downside. What's after a push to the downside? An exhaustion to the upside. And now we're waiting for another wave of sell pressure and price action confirmation before an entry to the downside, which would be an entry to the downside to capitalize on our daily push and exhaustion cycle. Okay, so let's talk entry on EuroCAD. Very simple. Here we saw that push to the downside. Here we're seeing an exhaustion. We must wait for price action confirmation to the downside, so that would be a bearish engulfing candle close before placing an order short, okay? TP2 will be at our weekly lower zone, which is our next area of significant buy pressure. Once price reaches TP1, we move SL to entry and we play with house money. What would make this trade invalid? Very simple. If we fail to see sell confirmation and price breaks this 4H mid-range zone to the upside, this trade becomes invalid because we know that there's not enough sell pressure for that continuational move. So in summary, there's 2 reasons why this is a high probability short to the downside if we see sell confirmation. Reason number 1, back to the monthly time frame. This is an overall push, exhaustion, and continuational push cycle on the monthly time frame. So overall higher time frame, sellers have control, okay? That's reason number 1. Reason number 2, in the event that price was to change direction with the double confirmation, this is still a high probability short to the downside due to the push and exhaustion cycle. So even if price will change direction, here we have a push on confirmation 2, which means after a push, we will see an exhaustion, and it's confirmed due to the sell pressure at our daily mid-range zone. So this short to the downside, if we see sell confirmation, is a very high probability short, but still keep your risk low. Why? A lot of fundamental uncertainty, political uncertainty. Okay, there's a lot of things going on in the market. So anyways, that's it for EuroCAD. Hope you understood why this is a high probability short to the downside. On to the next.